Hello viewers, welcome to my channel. I'm Hasham. So last video I have explained you about the residential status, how to determine the residential status of a person. Because the income tax is dependent on the residential status of the person during the previous year. So before calculating the tax, every time we have to first of all find out what is the residential status. The residential status means for an individual how many days he has stayed on the land of India during the previous year. For other persons, we have to see the control and management of the business. On that basis, the provisions are given under Section 6 of the Income Tax Act 1961 regarding how to determine the residential status of a person. All the persons are classified into individual, Hindu undivided family, firm, partnership firm, company, and body of individuals, association of persons and body of individuals, and every other person. Like this, we have classified, Income Tax Act has classified the SSCs into 6 categories. In the last video, I have explained you how to determine the residential status of an individual. Now in this video, I am going to explain you about the provisions, how to determine the residential status of Hindu undivided family, partnership firm, company, association of persons, and every other person. All the details I am going to explain in this video. So most of the time in examination, they will ask a theory question regarding determination of residential status. So these 2 videos are very important, so watch till the end. Don't skip in between. And I got the comment from the students, they don't want the theory. Many times, it's unbelievable. In examination, more than 50% of your question paper will be on theory, remaining 50% on problem. And problems are based on the theory. Many times I told you. So don't underestimate this theory. You must have the patience to watch, to listen the theory. So if you have not watched the earlier videos, I suggest you go to the playlist of my channel, select the subject income tax for the assessment year 22-23. Select the videos of this introduction chapter. Be perfect regarding what are direct taxes, what are indirect taxes, what is agriculture income, what are the rules and exemptions, and what is residential status. Inshallah, in the coming videos, I'll solve the problems. Now, before starting the explanation of determination of residential status of HUF, Hindu undivided family, take the screenshot of the points written on the board, then I'll explain every point in detail. Now, Hindu undivided family. This is also one of the person from income tax point of view. So what is Hindu undivided family? It's a group of persons linearly descendant from a common ancestor, and they are running the business. So it's a family business. The head of the Hindu undivided family is called the Karta. He will control, manage the business, and he has to pay the tax on behalf of Hindu undivided family. Head of the family is known as Karta, and Karta is assessed for the family income. Because he is the head, he is controlling, he is managing, he is responsible. He will be assessed for the income tax of the HUF. The other members of the family are called co-partners. The other members of the family are called co-partners. They are not liable to pay tax of HUF. They have to pay the tax on their individual income. So apart from share of income from HUF, they may have their own individual income. On that individual income, they have to pay the tax. But the amount received from HUF is not taxable. For determining the residential status, the situation of place of control and management of its affairs are the deciding factor. See here. In case of individual, to find out the residential status of individual, we have to see how many days the assessee stayed on the land of India. In case of individual. But in case of HUF, the deciding factor for determining the residential status is management and control of the business. From where this business is being managed and controlled, that is the deciding factor to find out the residential status. A HUF is said to be resident in India if control and management of its affairs is wholly or partly situated in India. This word you ought to remember. Wholly or partly. A HUF, Hindu undivided family, is said to be resident in India if the control and management is wholly in India or partly in India and partly outside India. Right? That is called resident. And control and management means the decisions concerning the affairs of the family. That means the HUF control and management means the place from where all the decisions are taken. Right? Simple example I'll give you. Suppose in India, the property, the business is in India, but the head of the family, Karta, is not living in India, he is staying in US, and from there he is giving the instructions of the business. Then this HUF, which is running the business in India, but the whole control and management is in US. So this HUF is called non-resident HUF. If it is partly in India, partly outside India, then it is resident. Example, HUF, part of the year Karta was in India and part of the year Karta was in US. So partly it is controlled from India and partly it is controlled outside India. Then the HUF will also be known as the resident HUF. If the place and control and management is outside India, then the HUF will be considered as non-resident, though the property may be situated. If the complete control, remember, complete control and management is outside India, the business is running in India, then this business is called non-resident HUF. So if some of the members of Karta may reside in India, but the place of control is set out of India, then also it is known as resident. If the HUF property is in India, business is in India, other co-partners are in India, but the Karta who is controlling, managing, he is having the powers, he is staying in US or any other country other than India, and he is giving the instructions, controlling from outside India, then the HUF is called non-resident HUF. Now, for determining the residential status of HUF, there are two sets of conditions, just like individuals. In individuals, just to recall, two basic conditions, two additional conditions are there. If any one of the basic condition is satisfied, then individual will be called resident. Then that individual has to satisfy both the additional condition. Then the individual will become resident and ordinary resident. Right? Same way, in Hindu undivided family also we have two conditions. Basic condition and additional condition. Basic condition and additional. Basic condition says a HUF is said to be resident in India if control and management of its affairs is wholly or partly should be in India. Again, I am highlighting here wholly or partly situated in India during the relevant previous year. If the control and management of its affairs are wholly situated outside India, then the HUF will be considered as non-resident. Very simple provision. Very simple provision regarding resident or non-resident. If the control and management is completely in India or partly in India and partly outside India, resident. If the control and management is completely outside India, non-resident. Now, place of control wholly in India, then resident. Wholly or partly in India, resident. Completely outside India, wholly out of India, then non-resident. That's all. These are the provisions. Now, additional conditions. Once we have decided that the HUF is a resident or non-resident, now we have to decide whether it is a ordinarily resident or not ordinary resident. For seeing the HUF to be an ordinary resident or not ordinary resident, we have additional set of conditions. These additional conditions are same as that of individual. No difference in additional conditions of individual and HUF. First additional condition. Karta or the manager of HUF has been resident in India of at least 2 out of 10 preceding relevant previous year. The Karta or sometimes Karta will give the power to any other member. He will become the manager. So if the Karta or manager is there, he should be resident in India at least 2 out of 10 previous years preceding the current previous year. Our current previous year is 21-22. Assessment year is 22-23. The previous year 21-22. The before 21-22, in 10 years, he must be resident in at least 2 out of 10. That is the first additional condition. Second additional condition, he has been in India for 730 days or more during 7 years preceding the current previous year. The current previous year 21-22. Before this 21-22, in 7 years. In those 7 years, at least 730 days he should stay on the land of India. These two are the additional conditions. Who has to satisfy the additional condition? The Karta or the manager. From residential point of view, the HUF may be ordinary resident, not ordinary resident, or non-resident, just like individual. We have 3 status: ordinary resident, not ordinary resident, or non-resident. Now, if Karta or manager satisfy the basic condition and additional condition, if the HUF satisfies the basic condition, that means the control and management is wholly in India or partly in India and partly outside India. So it will become a resident. And the Karta and Karta or manager satisfies both the additional conditions. So basic conditions satisfied, additional conditions, both the additional conditions satisfied, then the HUF will be called as resident and ordinarily resident. First rule. Second rule, if Karta or manager satisfy the basic condition and one or none of the additional condition, then HUF will be considered as resident but not ordinary resident. Basic condition satisfied. The control is wholly in India or partly in India, partly outside India. So HUF is a resident. But the Karta or the manager is not satisfying both the conditions or one of the condition. He satisfies one of the condition or he does not satisfy any condition. In that case, the HUF will be called resident but not ordinary resident. Lastly, if the Karta or manager does not satisfy the basic condition itself, we should not go to additional conditions. When basic condition is not satisfied, that means the control and management is completely outside India, wholly outside India. Then the HUF will be called non-resident. If the HUF is non-resident, no need to go for additional conditions. That's it. These are final 3 points you have to remember for HUF. Now, next one, residential status of a partnership firm. A partnership firm consists of group of partners, employed the capital, run the business jointly, share the profits. That's a partnership firm. The partnership firm is also one of the person from the income tax point of view. So we have to determine what is the residential status of a partnership firm. So here Income Tax Act says only 2 residential status are there for partnership firm. Either may be resident or non-resident. That's all. Ordinary resident and not ordinary resident will not be there. These 3 types of residential status will be there only for individual and HUF. For partnership firm, company, association of persons, every other person, there we have only 2 categories, that is resident and non-resident. That's all. So in partnership firm, in a partnership firm, if the control and management is wholly in India or partly in India and partly outside India, then the partnership firm is called resident partnership. If the control and management is completely outside India, then the partnership firm will be called as non-resident partnership firm. Simple example. The partnership is situated, the business is situated in India, and the control and management, suppose 4 partners are there, A, B, C, D. All the partners stay in India. They will take all decisions in India. So this partnership firm is called resident because all decisions are taken, controlling management from India. Suppose the partners have decided that during the year, suppose 10 meetings have to be conducted. Out of 10 meetings, 5 meetings we conduct in India and the remaining 5 meetings we will conduct outside India. That means the partnership business is partly controlled from India and partly controlled from outside India. Then also the partnership firm is called resident. Now third case, if A, B, C, D, all the partners decide that our business is running in India, but whenever we want to take the decisions, meetings, the meetings will not be conducted in India. All the meetings we will conduct at Hong Kong. They have decided all the partners will meet at one place in Hong Kong and there we take the decisions regarding the partnership business. All the decisions will be taken from Hong Kong. The business is running in India. Then this partnership firm is called non-resident because the control and management is completely outside India. Next comes residential status of a company, a joint stock company, limited liability company. That is also a person from income tax point of view. So how to determine the residential status of a company? First of all, a company which is incorporated under the Companies Act 2013, that will be an Indian company. First point. In India, all the companies, limited liability companies are registered under the Companies Act 2013. So every company which is registered under the Companies Act 2013 will be called Indian company. Indian companies are always treated as resident. Wherever their business is, wherever the management and control is, every company which is Indian company is a resident company. Right? That's the point. Thirdly, from the residential point of view, company may be resident or non-resident, just like partnership firm. We don't have ordinary or not ordinary. A company may be resident company or a company may be non-resident company. A company shall be said to be resident in India if in any previous year if. Now, two conditions are there. If these two conditions are satisfied, any one of the condition is satisfied, then the company will be called as resident company. The first condition says it's an Indian company. Every Indian company, every company incorporated under the Companies Act 2013 is a resident company. That's it. Secondly, its place of effective control and management in that year is in India. That means control and management of the company is completely in India. Completely, 100%. Then the business will be called as resident company. Example, a company incorporated in US. They are having a business in India, but the control and management of this branch in India is from India only, completely India. No instructions, no management, no control is coming from US. It is a US company, but the control and management is completely in India. Then only it will be called as resident company. Then place of effective management means a place where the management and commercial decisions are taken. That means all the board meetings, all the important decisions are taken. That is called the effective place of management. A company which is not an Indian company and whose control and management is situated wholly or partly outside India, then it is considered as non-resident company. Any foreign company, a company which is incorporated outside India, they are having a business in India. The control and management is completely outside India or partly from India and partly outside India, then the company will be called non-resident. Completely. Because the whole management and control, example, XYZ company is incorporated in US, they are having the business in India. The Income Tax Act says we have to find out where the management and control is. The company says the control and management are completely we get from US only. We will not manage and control, we get the instructions. That means the control and management is outside India. This company is a non-resident company. And second case, if the company says we take partly decisions from India and partly decisions from outside India. Some decisions we get from US and some decisions we take here itself. Then also the Income Tax Act says this company is a non-resident company. Third case, XYZ company says our company was incorporated in US. We are running the business in India, but complete control and management we take here itself. We will not get any instructions or management and control outside India. Complete control we are making from here itself. Then Income Tax Act says this company is a resident company because the control and management is completely in India. So a foreign company shall be treated as resident in India if the business and company is wholly controlled and management in India. A foreign company shall be treated as non-resident if it is control and management is wholly or partly outside India. That's all. So we have completed the provisions regarding how to determine the residential status of a company. Now every association of persons and body of individuals, just like joint venture, club, etc. In this association of persons or body of individuals, again the deciding factor is the control and management. If the control and management of this AOP, association of persons, is wholly in India or partly in India, partly outside India, it is called resident AOP. If the control and management of the AOP is completely outside India, then it is called non-resident AOP. That's it. And one more thing, last, every artificial juridical person like municipalities, etc. Again, the provisions are same. If the control and management is completely in India or partly in India, partly outside India, it's a resident. If the control and management is completely outside India, it's a non-resident. That's all. This is the end of the discussion on determining the residential status of an individual. So if you watch these two videos 3-4 times, then definitely, confidently you can write in examination. So you can get the full marks because every provision I have explained you in detail. So if you are satisfied, give a like to the video. Share my channel among your groups, among your friend circles so that more students can watch the video and enhance their knowledge. Subscribe if you have not yet subscribed. Give your comments. And lastly, buy the super thanks which is given below my video. Inshallah, we will continue the next topic in the next video.